Let's talk.
Giles Brown.
Right, so shall we talk about... what are we talking about today, kids?
Well,
we're going to be looking at... I believe we're going to be looking at some of the most common mistakes.
Correct.
That people can tend to make, leading with issues with our friends at the Spanish tax office. So how to avoid them. So what are the top tips that we can give our listeners today?
Yeah. Well, these are mistakes if you do not take the proper advice before coming to Spain, because are things that you can avoid if you do things properly. For example, look into the proper figures on the tax year. Many listeners are, for example, from the UK, and the UK tax year is April to April, whilst the Spanish tax year is January to the end of December.
Yeah.
So when I ask someone, okay, give me the 2025 figures, many times they think on the UK part of that, and they give me the tax 24-25 in the UK. And
are we just talking about? Are we talking? We're not, because we've been talking about companies before with the previous session. This is
more personal tax.
Okay.
Yes.
Okay. Right.
Yeah. Absolutely. As I was saying, when I ask someone to give me the 2025 figures, they normally think about the UK way of looking at that and declaring that. So they give me the 24-25 UK tax year. Of course, that includes 9 months of the year 2024 and 3 months of the year 2025. So the figures that are shown in that tax declaration can be wrong and not be accurate for Spanish tax purposes. Let's say, for example, a UK pension, although normally the figures for the state pension should be more or less similar from a year to the other, when doing the Spanish tax declaration, you need to look to the actual income from January to December. So it's better to look to the normal letter that you receive from the government showing the weekly pension that you are going to receive, and then apply that to the whole year 2025 in the case we were talking about.
Okay.
But in an example that you can see the problem more easily, it's when talking about dividends.
Yeah.
If I ask someone to give me the 25 figures, they gave me the 24-25 UK tax year, and there is a dividend in the UK declared 50,000 euros or pounds. That dividend was received in December 2024. For Spanish tax purposes, that dividend must be declared in the tax year 2024.
Yeah.
But you have given me that for the year 2025. So if you declare that in 2025, you are over-declaring income in 2025, under-declaring in 2024, and of course, that will create an issue with the tax office because they will want the tax for the 2024 plus interest fines, and then you will have to ask the tax office to give you the money back that you have paid on 2025. So that's why knowing what figures you need to look into before doing the declaration, it's very important to avoid that kind of thing.
I mean, what happens if it falls into this sort of grey area? Then, if your dividend falls between, because there are 2 months? 3
Yeah,
months?
but normally the dividend is declared the day it is declared in the UK. So if the company, normally a UK dividend will come from the UK company, and if the company declares that the dividend is due on 30th of December or November, that's the date when it is due in Spain, because here we don't follow the cash part of the tax. We take into account when it is actually declared. When you receive the payment, it's irrelevant for this purpose.
Okay, so what happens when you need to deduct tax that you've already paid in the UK? I mean, isn't that, after El Brexit, etc., isn't that become even more complicated?
Well, not necessarily. If there is a double tax treaty in place, and this allows, of course, the tax paid abroad to be offset in Spain, what we normally do in this case is we use the UK figures, we apply the proportion of the UK tax applicable to the tax year we are working with in Spain, and with that, we do the figures and we do the declaration. So it's important also to remember that not all tax paid in the UK is going to be deductible in Spain. Because always depend on what the double tax treaty says. So in essence, the key point here is to understand that Spain will always look to whatever has happened from January to 31st of December.
Okay.
on each calendar year.
Okay, so what is that? That's that one understood. So what is the next mistake that people make?
Yeah. A very common mistake is related to rental income. Okay.
Yes, yeah.
Why? Because normally you have an agent in the UK who manages your property and is the one who provides the information to us or the people who's going to prepare your declaration. And why is that an error? Normally the years are correct. We don't have the issue because they have an Excel and they can do it to January, December. But the problem is that the figure they give you normally has already deducted their commission, the tax paid to the UK, the expenses, and that is incorrect. Because in Spain, you have to declare whatever is stated on your contract, rental contract,
right,
or invoice that if it's holiday or on paper, whatever it says, and then the commission, the tax, the expenses go onto another box. So if you, for example, the agent tells you, as Javier says, the cash way. So, at the end you receive this month 1,000, the other 800, when it should have been 1,500 minus 300 in commission minus this, whatever, it would be wrong. If you're inspected, the tax office will fine you for doing it incorrectly. And then also another mistake is, for example, not having the invoices in your name. And this is very important when, example, your fridge breaks, okay, and the owner says, or the tenant says to the owner, I'll buy a new one and then just deduct it from my rent.
Yeah.
Then that person, instead of declaring the 1,000 rent, let's say it's 1,000 a month, declares only 200 because he says, okay, that's what's received. Because no, you need to declare 1,000 euros and then you need to declare 800 euros in an invoice in your name. So unless your tenant is going to buy the fridge in your name, the owner, you won't be able to deduct it. And doing those arrangements are wrong, tax-wise, okay? So those are common mistakes. Another common mistake is that interest in the UK for mortgages is not deductible. However, in Spain it is. You can deduct interest that you paid on your mortgage for the purchase of that property initially. That is allowed in Spain. What is not allowed is in the case you've remortgaged. Yeah. That interest wouldn't be. But the original one for the initial purchase, you can deduct it whilst renting your property out. That's a allowable expense.
Just as a thought here, if two things, if the TV breaks or the fridge breaks, and would you then, if I'm the owner of a property and I then buy in my name, and you have to have obviously the NIE number with this, etc. That would then go in there'd be a different box then?
Correct.
Yeah.
It's a different box, and that's why it's important. Because when you're inspected, what they'll ask is for the agreement and for the expenses. And if the agreement, of course, you've got 1,000 a month, you have to have 1,000 a month. You can't have, because I deduct in the earning one, then in the expenses, you'll have the other. So very important, and that's a common mistake.
Alternatively, if the tenant, I don't get the thing, but if the tenant does buy the fridge, would he then sell it on to you? Would he then do an invoice to the owner of the property, or just doesn't work? That no,
doesn't work.
Right, okay.
Doesn't work.
That's my cunning.
It wouldn't be deductible.
Trying to do has the end of that something. Okay. So we know that one. So that's interesting. So again, expenses has to go in a different anything like that. What about? Are we talking about salary income from abroad as well?
Okay.
Right.
Yes. Although salary earned income. Normally, you pay tax where the job is carried out. Okay. Yeah. Normally, that's what most of the double tax treaty states for most countries. But imagine for any scenario, the first year you haven't yet organize the tax where it needs to be paid, and you have to declare that income. Okay, usually what happens is that the figure you provide your tax advisor, is an amount that is deducting the social security you've paid, the tax that you've paid in advance, and that figure is incorrect. Okay, you need to declare the gross amount and give us the social security separately, and then the tax will see if it's deductible or not. Very important. I have to mention there's an automatic exchange of information agreement between the tax offices.
Right.
So the tax office in Spain will see the gross amount. And when it doesn't match, it's when you will receive a letter for this stupid thing. Because you can't, if you received 800 because your initial salary was 1,200 in social security and then another 100 in tax, you can't declare the net amount in Spain. Automatically you receive a letter and it's wrong. Okay.
Yeah. I mean, presumably they want to know. It's for their records as well. They want to know where the social security is going out, other taxes. They want to see how you got to that figure. You can't just go, oh well, this is what I got.
Correct.
Okay.
Correct.
Social security contributions. I mean, that can be deducted as well. Presumably.
Those are deductible.
Yeah,
no problem. Those
right,
are deductible, and then the tax. We need to see where normally it's where where you've carried out the job. That's the country where the tax has to be paid.
Okay. What about if you are? What about if we? If I'm in the UK, I'm working remotely because I'm one of these digital nomads, or something like that. You think, you know what? I'm just going to move to sunny Spain. I don't need to find a new job. I just need to find a new home. Obviously I am working in the UK, therefore UK tax rules apply. What could possibly go wrong?
And that happens a lot,
really?
Honestly. And the time that someone realizes that they have been doing things wrong, it's when they say, oh, I have been already a year in Spain. I have to do my income tax declaration. So I'm going to contact an advisor to do so. Then that's when you discover that things should have been done in a different way. As Claudia just mentioned before, what matters is when it's about the double tax treaty. And what double tax treaty says, it's what determines if a tax has to be paid in Spain or in the UK, in this case, if you come from the UK. And for the UK-Spain double tax treaty, what it says is that if a work is being done physically from Spain, the tax must be paid in Spain, regardless that the employer is in the UK or anything, or you are working remotely from home. That does not matter. What matters is where you are. Yeah. So you are in Spain, you are at your home. That implies a Spanish tax. Of course, that means that UK tax should not apply. So if your employer has already been in the situation that I just mentioned now, a whole year has already gone. You are at the time of preparing the declaration. Your employer in the UK has already withheld a year and a half of UK tax. And then you discover that year and a half of UK tax should have not applied. And then you have to pay a Spanish tax on your whole gross income without taking into account that tax paid in the UK. So you have to pay the tax twice. Yeah. And once you have paid the tax twice, you have to ask the HMRC to refund you that tax. Of course, that can cause you a cash flow issue because you are paying tax twice on the same salary. It can be a nightmare. In essence, and also, if you start doing things at that time when filing the income tax declaration, you may receive a certificate of tax residency later than you would have done if you have prepared in advance of your move to Spain. So that's why planning is important.
But I mean, if you're planning to move over here, and do the business from here, I know this. As my father used to say, people leave their brains at Gatwick Airport. But I mean, you can't just automatically assume, because if you're British, you're not even European anymore, and you might be working for a UK company.
It's not the general rule, but it happens. More than you would think so.
Okay. And then
there is people that plan in advance and others that don't.
Yeah.
Sometimes you read something in the internet that there is a double, and people rely on, as there is one sentence I hear a lot is, no, I know that there is a double taxation treaty. So if I have already paid tax in one country, I'm not going to pay in the other. And they say, yes, but the double tax treaty says something. There are 68 pages on a double tax treaty. So it's not only there is a double tax treaty if I have paid tax that is going to be deductible. It's what it says in it. And so for rental income, as Claudia mentioned before, the UK tax can be applied and then you offset that in Spain. So that's a different way of, if you are in Spain working, only Spanish tax will apply. For public pensions, it's only UK tax and not the Spanish tax. So depending on the source of income we are talking about, the double tax treaty applies in a different way. In the situation of someone moving to Spain, it's not only the tax, it's also social security implications.
Absolutely.
Because if someone is working from Spain, he should be covered by the Spanish social security in anyhow. This can be done with an A1 certificate, which is an international social security coverage if you are paying social security at source, but that only lasts for a couple of years. Yeah. And the proper way of doing that, it's either you ask your employer to register in Spain as an employer so that the tax and social security is paid automatically to the Spanish system. There are a lot of people reluctant to do this because they think that this is going to initiate an investigation from the tax office.
There seems to be this fear, doesn't there? There's
and
always
the tax
a fear,
office is going to...
it's like the Inquisition, the Spanish tax office. Oh, I can't, oh no, they'll take me away and, lock me in.
But normally if you do things in advance and you do things properly, you will be out of risk in most of the cases. So... If you are planning, or imagine that you are the owner of a company in the UK and you are planning to hire people in Spain. So the easiest way of doing that is setting up like an employer of record in Spain so that you can employ those ones that are working from Spain. Another option is that if it's only one case and there is only one employee of that company, is that person becomes a self-employed in Spain, a contractor. So that person pays his own social security, his own tax, so you are out of risk in Spain. In essence, every situation is different, so it's about looking for advice in advance.
Okay. Get the advice. The message is always get the advice before doing anything. I mean, you do it anywhere else. What is the next common hang on.
Oh, no, it's not grandes fortunas, no.
Oh, come on.
Nearly there. Yeah, lots of people get confused and think that the M720 is the same thing as wealth tax. So they're for some reason, the historians in Spain ignore the M720. I don't understand, but many clients come to us saying, "Oh, I have you filed the M720?"
Just remind people what the M720 is in case they think it's a motorway. Okay?
Yeah, so this is the confusion because they think it's the same thing. So they come to us and they say, "Oh, there's no wealth tax, so we haven't filed the M720." So the wealth tax is taxing your wealth. The M720 is a declaration of all your non-Spanish assets. They're similar, but they're completely the same. The M720, there's no tax to pay. The wealth tax, you pay tax. And they get confused with this all the time. And so if their autonomous region has no wealth tax and they're beneath it, they haven't filed the M720, and that they can easily put themselves into a being fined by the tax office situation. So the M720, guys, declaration of your non-Spanish assets, and the limit is 50,000 euros the first year. Then there's lots of complicated rules for the second one, but that's not important. But they're different declarations, and not because you don't have to file a wealth tax means that you don't have to file M720. You normally, if you come from outside Spain, you normally always have to file something in your M720 because you've had a life outside Spain and you will have a bank account or something to declare. No tax to pay.
And I mean, as I said before, wealth tax includes foreign and Spanish
exactly,
assets.
Exactly.
And it varies between the regions, which always gets some people
exactly,
the whole thing.
Exactly.
Okay, that's another one out of the way. What is the next mistake?
This is a very old mistake, and I can't believe that it's still happening. When you buy your property in Spain, you've got local taxes related to the property, which is it's like the council tax, which is called IBI, and the rubbish tax. Those are connected to your home. So if you've got a good tax advisor or lawyer who when you purchase your property, what that person will do is put these taxes into a standard direct debit mandate with your bank, so you can really forget about it. Or, although you shouldn't, you should always be checking through that the payments have gone through. And why do I say this? Because Spain is not normal. And when I say that, it's because they are not going to tell you about this obligation. And simply, if you do not pay the tax, they will not go after you. And suddenly, a reminder or anything. And suddenly, one day, you find that your house has been embargoed with 10,000 euros. And why? What's happened? What's going on? And it was because one day the direct debit found itself with no funds, maybe 2 euros missing, and the direct debit automatically stopped. And you thought, oh, it's being paid. My lawyer organized it. And no. And for many years, or even just one of them, maybe the rubbish is being paid and you think it's the IBI, or the other way around. Oh, you see ayuntamiento and you say this is being paid. And suddenly you find yourself. So it is very important to check that these payments are being paid, even if they're in the direct debit format.
Right, we've got literally 2.5 minutes, so let's get through it. Right,
okay.
The correct address is that it's the Modelo's 030.
030, yes.
Yeah.
We have. I think we mention this every time we come to the show almost, but it is very important that the tax office has your proper address. So, because whenever they need to contact you, they are going to use the address that they have in their records. If this is not updated, you will be missing letters from the tax office, which will lead, in essence, and to be short in this part, in fines. So always file an M030. If you have not done so, update your address with the tax office so that they can contact you easily.
Okay. Always make sure you've got that as well. We're not going to have time to do the non-residents. I know we've got more to speak to because we've got literally a minute and a half. So just quickly, because we'll come back to this and maybe next time. Any other issues then to residents? They need to make sure.
Well, yes, there's a very important one, and is when deciding to leave Spain, just the way we've said, you need advice when coming to Spain. Also, you need advice when leaving Spain, because you'll find yourself. I invite you to read an article about a client who left Spain without telling the Spanish tax office where they were going to, and then they find themselves with. You can find yourself with letters being written to you and without the chance to respond to them because the deadline has gone, and all you have to do at that point is pay the fine. And again, having a proper fiscal representation address with somebody like us or a reliable address is super important.
Right, we're actually out of time. This has never happened before, but we're having such a laugh. If people want to find out more information, where should they go straight away?
www.spenceclarke.com, Spence with an E, Clarke with an E.
Javier and Clarke, thank you so much for your time today.
Thank you.